Hi, what's up everybody? Today I'm here with Vic Agarwal from Winchester, Virginia, and he's a fellow property manager. And today he's going to tell us about his experience in investing in Winchester, not just with long-term rentals, but also short-term rentals. So I'm really glad you're here.
Thank you.
Really excited to talk about. But before we get started, this is Coffee, Cocktails, and Conversation, so we're going to get some coffee first. And Vic, I've got something special for you. I got a local coffee roast, and are you okay with cocaine?
I love it.
Okay,
yeah,
because
I
this
don't
is
start my mornings without it.
You know, cocaine for coffee. This is by Cafe Creole. These guys are great. They do coffee with a cause. So they actually recruit these former cocaine guys who used to farm like cocaine, and now they turn them into coffee bean farmers.
Wow.
So it's really cool. So they're really helping the local economy there. Where is this at? Columbia, I guess. So we're gonna try some of this. Let's grind it up. We gotta grind it up.
All
fresh.
right. Perfect.
If you're new to my channel, I'm a real estate investor and I have investments in Texas, Virginia, and Pennsylvania. In addition to that, I also own a property management company where we manage hundreds of units in the Austin, Texas, and Northern Virginia markets. I love hiking and I love skiing and traveling, and I try to do that as much as I can and use those opportunities to meet new people and discover new markets to invest in. If you love all of those things, please subscribe to this channel and hit the notifications bell to be alerted for future content. If you're interested in how my company can help you acquire and manage rental property in Austin, Texas, or Northern Virginia, you can learn more at marshillpropertymanagement.com. Okay, cheers.
Cheers.
My coffee's a lot lighter because I had a cream fail. A little bit curdled there, so I don't think I'll drink that. All right, let's go and talk shop. All right, Vic, welcome to my house again. This is great. I've been looking forward to this.
Yeah, thank you so much. I'm excited. It's a beautiful house, by the way.
All right, yeah, we're gonna try to Airbnb it. So if anyone's looking for a vacation in DC or Shenandoah Mountains, make sure you check out this listing on Airbnb.
Yeah, highly recommend it. I've seen the inside. It's gorgeous.
Yes, yes. We'll have a little paywall so you can see more than just one angle. You pay $1, you can see another angle. No. So yeah, I'm really excited to talk to you because not only because of what I'm doing here personally with this Airbnb, and I'm a little bit nervous because I'm not familiar with this market, and you're in Winchester, which is just how far away from here?
It took me about 70 minutes to get here.
Okay. So it's kind of cool because like here I was expressing to some friends that I'm not in DC for people who want that DC experience. I'm not in the Shenandoah Mountains, kind of in the middle of nowhere between them, but you're at least closer to the Shenandoah Mountains, right? So
yes.
How far is that from you?
So we are considered the Shenandoah Valley. Winchester is part of the Shenandoah Valley. We host the annual Apple Blossom Festival every year, which is going to happen end of the month. Just a quick plug. If you guys are ever in the area, it's amazing. Winchester's there. The properties I personally do Airbnb with, work for Airbnb, they're all in the Shenandoah Valley. So each property is distinctive. One is on the river, the Shenandoah River. One is on a mountain. And one is on a creek, so a well-known creek in Cape and Bridge. So they're all properties that people are coming for a destination. Okay. So we're going to get into that. And if you're watching this channel for the first time, this is all about real estate investments. If you're new here, welcome to the channel. We talk about real estate investments and traveling and short-term rental, which kind of combines the two. And please like the video and subscribe if you haven't already. But today we're going to talk about what you can look for as an investor in the Winchester market. And whether that's a long-term rental, which Vic has a lot of experience in the property management business there. So we're going to hear his story. Or if it's short-term rentals, which is something new. It's a new, I don't know, how long have you been doing the short-term rental thing in the Winchester area? Probably got initially started 5 years ago.
Oh wow, it's not that new after all. Wow, that's pretty early.
I feel like I learn something every day, so it feels newer than it is. Yeah.
That's awesome. So I'm really excited to learn something from you about the short-term rental market. So why don't we first talk about how you got started in property management. Tell us your story, how you got started.
So I graduated college, moved to Winchester to help my parents out with their kind of tough, struggling business, especially after 9/11. That's the year I graduated college. I finished a couple years early. Moved in with my parents, and they were struggling with their business, and dove right in, and I realized that the only way, if I wanted to break away and eventually do something, was real estate. I bought a couple houses. The market kept going up from '01 to '05. And I bought 2 houses in '05, and I was like, all right, like I'm gonna, double my money soon. And unfortunately, it crashed right afterwards.
Oh, man.
But those 2 houses, I just realized, I was a little overwhelmed at times, and I was like, all right, I can give them to somebody else, but there was such an entry fee to get into property management. So I was like, all right, there's got to be a better way. So I was like, I can do this. And I didn't want to pay a big leasing fee. So our firm doesn't charge a leasing fee. There's several different ways to skin a cat, but we don't charge that big entry for new investors, which I thought I was in '05. I, didn't want to pay someone a couple $1,000s to rent my houses. And then from there, it just kept growing. And then finally I got a real estate license and started telling other people what I do and how much money I make. And just planted the seed, and eventually, I went from like 9 properties to 18 to 30 to 50 annually. It was almost doubling.
And these are your own properties?
No, these are for
homes
friends.
you're managing. Okay,
correct.
Got
and
it.
then my own portfolio grew as well, and now we're several dozen units that I own, single family homes. So it was just, I would say it was an organic growth and a lot of luck, but we're up to 153 properties as of today, and we've been up to 220, and now we're down.
Wow.
But that's just, again, organic because of the market shift.
Yeah. So when you were up to 220 and you came down to 150, over what course of time was that?
That was almost 3 years.
Okay, so people just selling because taking advantage of the market, or one reason or another for different investor goals, that type of thing?
Precisely.
Yeah.
And both of us kind of share a unique time in history, because right now there's a lot of people from '05 that were reluctant landlords that got stuck being a landlord because they couldn't sell. Right. And then, so we inherited those people.
Yeah, that's how we started.
That's how we started, yeah. So we got, hey, I owe 250 in my house. I could barely get 180, and I, owe 210. So they're just going to hold it and rent it out and kind of ease the pain. Mm-hmm. And then finally they got out of that, and they're like, we hate this business. Let us unload. Some
hate it, some love it.
Yes, yeah.
And some stay.
Right. It has to work,
It's interesting that it used to be a few years ago where I would consult with an investor, and a lot of times they're like, I want cash flow. And to me, I'm like, that makes sense. Cash flow makes sense. You want the investment to be self-sustaining. And then there's some investors who, they don't buy for cash flow, they buy for appreciation, and they're okay with negative cash flow. And I used to kind of like poo-poo that. I used to look down on that. And especially when I came to Virginia, because I was from Texas and all the numbers worked beautifully. Right? Everything was inexpensive and the rents were great and it would cover the mortgage and all the payments. Then I came here and I'm managing these properties in Northern Virginia, and I'm like, why are these investors buying these 400 some plus $1,000 townhomes or more if it's a house, and they're getting these tiny rents? I didn't understand it. And then I think maybe it was just in the past year that I think my thinking has shifted a little bit. And I think it's shifted because maybe the Austin market has accelerated so much. And now I'm in the same boat where I have this $500,000 asset making a little bit of rent, not covering everything. Or maybe it's just, I'm just growing as an investor myself. But what I've realized is that cash flow isn't the only way to skin a cat. Like you said, there's different ways to skin a cat. I don't know how you feel about this subject, but I was talking to a good friend of mine who owns a home in Texas. And hi, Christina. If she's watching this. She's one of my first property management clients, her and Matt, good friends, and they want to sell. They're currently in this decision of wanting to sell because they're negative every month because of the taxes have gone up so much because of these values, and taxes in Texas are really high. Oh. Taxes in Texas, that's like a tongue twister, but they're really high. And I mean, even my own house, I'm negative a couple hundred every month. But one thing I want her to see, and one thing that I'm trying to get other investors to see, is that take a 10-year time period, and let's just say you're paying $300 a month, as long as you can afford that. You have to look at the return. Like, what if you're paying $300 a month, but over 10 years your house is appreciating $10,000 a year? I mean, you got to look at that. It's real wealth building. It's not just principal pay down, right? That appreciation really means something. I don't know, what do you think about that?
Again, I'm going to go back to our previous point. I think it's so unique because our biggest obstacle, and any investor right now, if you are cash heavy, is inflation. So the real estate market is booming greatly in part because of inflation. So the way the US government measures inflation has changed 2 times in the last 50 years. And if you use the first way that they measured inflation, we would be up to 18 or 20% right now. So we hear 8%, 7.8%, 9%, depending on which economist or which newspaper you read. So those numbers are skewed. So if you put money in real estate, the asset holds value because the value is the utility, which is people can live there. It's, your stock portfolio gives you 6%, that's great, but you lost 8% in the value of the currency in that stock portfolio. So that's why real estate is great, and it pays a dividend. I don't think we're here to sell the notion of just investing in real estate. I think you're listening to this because you understand that. Yeah,
but I just think it's great how you don't have to just rely on cash flow. Is kind of
correct.
The point.
Yeah.
Right,
appreciation is a huge value.
Appreciation is huge.
Yeah.
So give me and tell the people watching here because I see a lot of people who are like, wow, it's not cash flowing, which that's it. You do want it to cover some of it because you can't be paying negative. You can only do that so long. It's not sustainable, right? So they're looking at the outskirts. In Winchester, they're looking in Winchester. I know a lot of investors are like, I want to get out of Northern Virginia. I want to go further out, and they're looking at Winchester. So if I'm an investor today and I want to get something that's long-term, like a long-term rental, traditional long-term rental, what would be the ideal product if you could pick any home you want, any product you want? At what price point would they be looking at, and what kind of rent would they be expecting?
The guys that I tend to admire, the investors I tend to admire the most, are what I call the townhouse millionaires. They just you'd never suspect, but they own 8, 10, 20, 40 townhouses, and they're just making it. I think in the last 5, 7, 10 years, everyone's trying to get multifamily, the $400,000, $500,000, $100,000 per unit multifamily. Those are getting to be a challenge. So people are buying them in worse and worse condition. And they just don't understand that there's a lot of loss of value when you're putting money into, getting it working well.
Your return on capital now is going down because you're sinking so much into it.
Right, and it's all capital out of your pocket. It's not a mortgage capital. Like a lot of lenders don't want to, front the money for you to do all the rehab. And just depending on which product and which bank you work with. But as far as a townhouse, like a $250,000 townhouse that you can rent out comfortably, rents are going up like the wildest I've ever seen. A $250,000 townhouse that can rent for close to 1% of that monthly. That's your gross rent, of course, and then
that's also holy grail of long-term rentals is the 1% rule. But it's hard to find. Are you saying that it's possible in Winchester?
It is, and you have to. You're not going to get those 7, 8, 9% cap rates anymore. I think those are getting to be more and more of a challenge. I think it's now investors are just. I think we're getting back to the 2005 philosophy. If I can just cover my cost, even if it's just the interest portion of my payment, they're getting into that, which is a little bit dangerous. But still, there's kind of deals out there if you can put the sweat equity. It's you got to find that perfect balance. Like, do you want the return or can you put it into it? So
do you want to wait 3 times longer to find the better deal, right? Or do you want to get going now? And as long as you can afford maybe covering a little bit of that principal pay down and wait for appreciation, the rents to catch up. That's another option.
Exactly. I think appreciation will reward you for acting sooner than it did, say, 4 years ago, 7 years ago.
Yeah. So. Okay, so $250,000, you're looking at a townhome with no car garage, 1-car garage?
Our firm sold a 3-bedroom, 2.5 bath with a garage for $275,000.
Okay.
Newer construction, and it probably needed $3,000 or $4,000 worth of work.
That's not too bad. That's not too bad.
It wasn't bad at all.
And it rents in the mid-2s?
Yep, mid-2s.
Okay, wow. Well, you heard it here first. Well, you heard it here first, folks. Why do I say so many tongue twisters in this? I'm not trying to do that on purpose. Yeah. All right, so that's the long-term rental. Now let's kind of shift gears into the short-term rental. So how many short-term rentals are you managing?
Currently, I'm managing 3.
Okay, I'm managing 3 too.
Oh, perfect.
So even though it's 3, it's still a lot of work sometimes, all these guests coming in and out. Now, are there certain seasons where it's just the hot season, or is it kind of stable all year long? Tell me about that.
That's a great question. So I think it's specific to the property. So depending on which market you're in and what the property offers, is it a destination? So if it's something you can just stay and do nothing and just be there, that's great. I think that's the way to go. The house itself is a sale.
I see.
Not as, hey, there's 7 hot breweries or there's a downtown district that you want to go to. So I think if the house itself is just where people want to go,
I see.
I think that's amazing. But those are a challenge and those are super pricey.
Wow. Would you say your 3 homes are like that?
Yes,
okay.
I've been fortunate. Like all 3 of my clients are, they created something that's an amazing
like
place.
A unique experience.
Unique experience. Yep.
Do you think you need that to be successful in Winchester?
I think it's an advantage. I don't think you need it because there's a lot of people coming in and out of Winchester now. It's become a place, there's a lot of industry moving in there. A lot of young professionals are moving to Winchester, so that's great. And every one person that moves there knows, 50 more people who may visit. There may be graduation, weddings, ceremonies, birthdays, bar mitzvahs. So.
Wow. So what else do people go there for? Like, tell us about what are the things to do or restaurants or some activities?
So Winchester, all of a sudden, like when whenever the government was promoting breweries and wineries, it seemed like there was 20 new breweries in the area that popped up. So a lot of people come for that. We have a university there, Shenandoah University, so graduation's big, homecoming games, those kind of events. What else? And it's just, I think a big thing is a quick getaway, just to get out of the city.
From the city.
Yeah, and people, I think, here are just tired of traffic and just being congested.
Yeah.
So.
Yeah. See, the thing with this house is it's still considered Northern Virginia. I'm still Fairfax County. It's still not quite a getaway, even though I have 4 acres and it's kind of peaceful. But that's a true getaway, going towards the mountains. I like that. All right. So let's talk about a ideal vacation rental. So if I was an investor and instead of buying a long-term rental, I want to buy a short-term rental, give us an idea of what some of the criteria we should be looking for.
Okay, so everyone that calls me, for every property that we manage, I probably have spoken to 5 other people.
Okay.
So that, every conversation you have nowadays is basically they're vetting me, I'm vetting them. We want to make sure that we're more relationship oriented, not transactional. So we want to make sure that we're the right fit for them as well as
compatibility.
Compatibility, exactly. So we want to make sure that your pain threshold, it's not as, there's a lot more bumps in the road, if you look at a graph of a stock performance, it goes up and down. So same thing with an Airbnb. There could be a time, for whatever reason, we have heavy snow, your annual rental is going to stay rented, but your short-term rental is not.
Yeah.
People aren't going to want to travel. There's going to be disputes like, hey, I can't get into your driveway, so give me my money back.
Right.
So you got to make sure that that you're ready for that. It is a hospitality industry, so you have to be giving, caring, kind. If it's just a money thing, then it may not be the route. I think
those are good words.
Yeah, it's just the annual rentals are more your route if it's just about cash flow. But the high peaks on the graph are really high. There's months I've given clients over $20,000.
What are the hot months? What are the hottest months?
Hottest months for us are starting now, April, until Christmas. So
that's a pretty long time frame.
Yeah, it is. We're very lucky. Again, the destination helps. The weather doesn't, and I think generally January, February, people are just recovering from the financial burden of the holidays. And I don't say that with any disrespect. People are just kind of recovering,
They're traveling, they've done all this stuff, so just want to chill out for a little bit.
Right.
So January, February, March is probably a good time to work on the house, work on the business, that type of thing, improve it, make it more competitive.
Exactly. And another note, just because you said that, with annual rentals, they say the best occupancy rate is 100%, which I agree. But with short-term rentals, it's 85%. So just make sure when you talk to a property manager, they're not trying to sell you that we can book your place out, because you need the downtime to do, stain the deck. It's an asset, right? So you want to protect. It's just like a child. You want to keep them healthy. Get the checkups. Check the house, events. We're having event cleaning just because people bring their furry animals, so we don't want other people to have allergic issues. So
that's good. So I want to take you through the EdBNB score.
I'm looking forward to it.
All right. EdBNB score is a proprietary grading system to see how Winchester stacks up against all the other Airbnb markets that I've traveled to, and I've interviewed other investors and or property managers. So I'm interested to know how it stacks up. So there's 5 criteria. Okay, the first criteria is drivability, and that's defined as how far is this location from a major statistical area, MSA, within 5 hours, because we want driving distance. Driving distance is good. There's some destinations that you can fly into, but they're just not going to be as popular and resilient in all sorts of economies, right? So something that the ordinary Joe can just drive to within a 5-hour trip. So what would those major cities be?
For Winchester in particular, we get a lot of traffic from Northern Virginia, DC. Okay. And the MSA that you'd consider DC is now expanding. Like there's so much population, so it's a bigger area. We have Philadelphia, which is under 5 hours. Baltimore. Okay. These are big hubs that we pull a lot of people that just want to get away. Good.
Do you ever get a feel for like where the people are coming from?
Yeah, so in their profile, you can see where they're coming from. We actually get some international
Anything
travelers.
surprise you, like international?
Yeah,
wow.
We're currently hosting a guy from Israel, and because DC has so many international airports, they can fly in, meet family, and travel.
That's nice.
Yeah,
and Dallas Airport right there. So
absolutely, and COVID's been a huge factor. Like we've had month-long rentals because people want to just stay and be away.
So to get a score of a 5 for drivability, you have to be within 0 to 2 hours. So it sounds like we are. We got DC, we got Baltimore, we got Pittsburgh. So definitely we got a perfect score on drivability. Now the second criteria, Vic, is going to be demand. So demand is how big are those MSAs? Because you could be close to an MSA, but if it's not a big MSA, then it's not as powerful. You're not going to have as many people going there. So when we looked at the populations of DC and Baltimore and was it Philly? Yep, Philly. We came up with 13 million, just over 13 million.
Wow.
So when we do some post-editing, we'll try to see if there's any more MSAs that pop up. But that's really good because that's a score of a 4. To get a score of a 5, you need at least 20 million. Okay. So if we could squeeze in a little 7 more million people within a 5-hour drive, we'll see if it scores a 5. So that's not bad. Demand, so a 5 for drivability and a 4 for demand. The third D is dinero. So we're going to park here for a little bit and talk about the money. So for a house that is an ideal short-term rental, what would someone expect to spend for that?
So that's a huge variable. You know, your passion, your mission plays a big role in that. Like we love the clients that see the vision. You know, they're like, hey, they don't just look at it as a short-term rental. They look at it as in the future. Sorry to kind of make that sound cheesy, but you know, they see the distance with the property. So the most recent one is a great client, a young guy based out of DC, and he just sees so much value in the southern Shenandoah Valley. So we're hitting Tom's Brook, these towns that you don't hear about that often.
Yeah, never heard of this town.
Yeah. Tom's Brook, Murraytown, and he's picking up stuff that's gorgeous. Like his vision is great. He bought a house, single family, 3-bedroom, 2-bath, unfinished basement for I think $380 roughly.
Okay.
He put $35,000 into it.
Okay.
You know, at the time I thought it was overkill, but it's turned out gorgeous.
Wow.
And it's
wow, it's surprising because 3 bedrooms just sounds so small. You know, I'm used to thinking like you need big homes with lots of capacity for people. That's what I'm trying to do with this home. That's what I've done on the homes in the Poconos. So he's got a 3-bedroom home.
Yeah, he's got a 3-bedroom home. It sleeps 8.
Okay.
And typically, we got some air mattresses just for emergency if something happens. It's got a nice deck, and it's a double lot. The second lot actually is on the water, so it's on the Shenandoah Valley.
So it's not in like a typical neighborhood.
No.
Okay, good.
No.
And it's for 1 or 2 families.
Yep.
About, let's say $400,000.
Yep.
Okay. Now, how long have you managed it? Do you have full numbers on that one yet?
So next month will be a full 12 months.
Oh wow.
And last year with just 8 months under management, and we took it from ground zero. It did about 32,000 in gross, and I think the owner made probably 21,000.
Okay.
And there was a lot of startups things that we didn't plan on, like $2,000 for a washer dryer, and we need a high capacity washer dryer. Highly recommend for a housekeeper for a quick turnover.
Like what kind of washer dryer? Would you say like the Speed Queens, like the commercial stuff? Do you think you need to go there, or do you think just a big old
No, because
residential?
with the Speed Queens, you gotta have it professionally mounted in
Oh,
cement with the Loctite bolts and
Okay.
stuff. I would say just anything high capacity, no agitator, so she can put more.
Oh, okay, I see what
he
you're
or
saying.
she, excuse me, can
Yeah.
put more
Okay.
in the machine.
Okay. So for this house, for example, how many are these like weekend bookings or week-long bookings in this area?
We're, today's a Tuesday morning, and we're hosting somebody for Monday, Tuesday, Wednesday. So it's all over. If I think people see the value in the property, if they can sneak away and they can, get 2 of their friends or 5 of their friends to just break away and be able to go and work remotely, they will. You got to have Wi-Fi. Do whatever you can to get high-speed internet. In some places, in these remote places, it's a little bit of a challenge, but we've seemed to, so far, have had no issues with that. But to address your question about the weekday versus weekend, during COVID, people would come out and just stay for a couple weeks, several weeks. Hotels were operating at low occupancy, under the federal guidelines. So we were taking on people that needed to stay in a hotel for a month. They would just stay in an AirBNB. Now, I think we're getting a combination of both. Spring break is great for us, any local festivals, but I'll give you particular examples. One Airbnb this month, I've got 6 days available in April we're in 2022. So I've got 6 days available in that month, in this month. And then November, I had only 8 days rented. So there's, it's a give and take. I think this winter was exceptionally slow for us, but it's picked up tremendously this spring, and I think things are going to look back to normal.
So how many bookings per year would you say someone can expect?
So I haven't run the numbers that way, but I can tell you, we're running about 60 to 80% occupancy across the board. So, with the newer property, remote properties, it does make a little bit of an impact, but I think it more than covers the expenses, and it more than it also comes down to what the owner expects. If the owner is expecting triple the rate of return from a long-term investment, a long-term rental versus a short-term rental, you may not always hit that, but I think you get pretty close.
So gross revenues on a $400,000 house will be about $30,000.
That was for the 8 months.
For 8 months. Okay.
Yeah.
So for 8, would you say it's closer to what? 40-ish, 50 maybe?
Yeah, I think we're going to probably get into the mid-40s comfortably. Yeah.
Okay.
Yeah.
And then with utilities and cleaning and all these expenses, not including mortgage, management, after paying all that, what do you think an investor would net on that?
So that house, I would say, would have rented for long-term for about $24,000 a year, somewhere in that ballpark at the time. With an Airbnb, it'll probably do north of $32,000, is my prediction.
Okay.
And remember, utilities, and there was a lot of unforeseen expenses, like the washer, dryer, just regular maintenance that would have come down to the tenant.
The expenses seem kind of low, though. I mean, if he's grossing 45 and he's taking home 32, that's leaving only 8, 9, 10, 11, 12, 13,000 for cleaning and utilities and management.
So
that seems a little low.
Well, here's why. It's on well and septic, so there's no water bill.
Okay.
That's a huge expense with cleaning services, and also your tenant, your end user, is paying for the cleaning. It's a
right. Okay. Yeah, I normally count that as a expense and an income.
Oh, okay.
But
I didn't.
You're saying you're washing it out.
Correct.
I see. Okay. All right.
And also, we do have a slight markup than our actual cost of cleaning, so we can cover.
Right. I hear you.
Yeah.
Have a little margin built in.
Yeah, we have a margin built in for, we do a welcome pack, and that's what drives the reviews. If people feel like you care about them, and which we do want people to enjoy their experience. Just a $15, $20, just a couple snacks and a bottle of wine, like it goes a long way. And when you're traveling to get to a destination,
it's nice to have that waiting for you, huh?
You got it.
I think I need to maybe integrate that. We did something not quite like that, but maybe we need to make it a little bit more frou-frou, local. Maybe that might help a little bit.
Yeah.
Okay, so what are the numbers on that? So dinero, we're looking at the holy grail is 20% or more return on your money. So if you're buying a $40,000 property and you're putting down 25%, let's just say that's about $100,000 that you have down invested into that property. And we're just dealing with rough numbers here. So $100,000, and what would you net from a property like that after expenses? Would you say in the 30s, 30,000 or something, or 20s?
I think for a $100,000 investment into a 400K property, I think 20,000.
20,000.
Yeah,
would be a conservative estimate?
Yeah.
Okay, which is 20%. So
Yes.
that's great. So that's a score of a 5. All right, we're coming down to the home stretch. We got 2 more criteria. We've got fun factor. So tell us about what is there to do there in Winchester. Well, you kind of gave us a little bit of idea already. You know, people going to the Shenandoah Valley, right, for getaways and hiking.
Yeah. Absolutely.
Yep.
So fireplaces, we have an outdoor fireplace in one of them. It's amazing. I actually probably watered it down by saying that, but it's just a great, breathtaking experience when you get there. One of our Airbnbs is on the river, Shenandoah River. So you just walk out and we've got a bunch of stuff for the kids to do.
Can you actually go on the water?
We can go in the water.
Cool.
You walk down and
nice.
it's just to your knee or your hips. If
Okay,
when it's really rainy, it comes up to your hips. So it's easy for kids and animals and everyone to enjoy. One is in the mountain. The morning sun coming up is amazing. Everyone that stays there talks about it. You can have a small wedding. We don't encourage group activities, but 8 or 10 or 20 people, especially with COVID restrictions, we had a lot of small ceremonies.
Okay.
And the third one's on the creek. That only sleeps about 6 or 8. And the back porch is on the creek, so it's amazing.
Wow, man, you got some nice properties.
Yeah, so we've been very lucky that everything is like a destination. But in terms of fun stuff, breweries and wineries, those always hit home for travelers. Golf, Winchester.
Oh, there's some golf there?
There's a lot of great golf places, and there's so many close courses that people can come and just stay and try to do 3 days of golf.
Oh, that's cool.
And we talked about all the other stuff. People that come for graduation and so forth, ceremonies, birthdays, retirement. A lot of people.
Okay,
as
cool.
baby boomers are aging out of the game.
A lot of cool local restaurants there.
Yeah, and delivery. It's kind of nice to have food delivered to your place if you're in an Airbnb. Downtown Winchester has some great restaurants. Nothing that stands out, especially into your market. You've got excellent food out here. So, but yeah, it's great. It's something for everybody. Like if you're a certain genre of food you like, you can find that.
Good. We'll have to score that after the fact. I can't remember what the scoring is on that. And lastly is friendly criteria. Is it STR friendly? How hard is it to get up and running? Are the policies and regulations established already or what?
So if you guys do any research on Winchester, Virginia, so Winchester, the city of Winchester is 17 square miles and they have made it an extreme challenge. They're actually have all these policies in play to discourage anything less than a 30-day rental.
In the city of Winchester?
In the city of Winchester.
So it's best to buy outside the city limits?
You got it.
Okay.
Yep. So ours are Shenandoah County and south. We haven't had a challenge, and I think in those kind of smaller communities, other businesses that profit from more people coming in are happy, and they're in turn, there's some tax revenue that comes through the town that I think is a blessing. The bigger cities that are just focused on real estate taxes and, I don't know how they run their numbers, but kids per household for education dollars and all those statistics, they're going to, discourage these short-term rentals. So if one piece of real estate could make an owner $24,000 versus an owner $60,000, they're going to be like, how do we get the revenue from the $60,000?
Well, what does the county do for restrictions? Do they have any restrictions on?
If they find out, so there's a program that anybody can. I think any government official or somebody can go in and just regulate what Airbnbs and what VBROs are out there, and they can kind of target them and say, hey, listen, you don't have a license, or...
So you need a license. You got to get a license through the county.
Yeah, in the city of Winchester, you got to have a license.
But what about outside the city?
Outside the city, our clients, it's in our contract, the clients have to do it. And we assist with them.
Outside the city, they still have to get a license?
Yeah. You want to have a license because the insurance is going to want that. The insurance is going to want to know that it's known, it's covered if there's a claim.
Okay. Cool. Do they have any restrictions? Like in Fairfax County, I know they say you can only rent it out for 60 days out of the year.
Oh, really?
Yeah, it's ridiculous.
Every county is their own. I know Loudoun County has a deal where, or a parameter where you can only do a certain number of weddings a year if you have a wedding venue.
Yeah.
So, and more people.
But they don't restrict days in Winchester. It doesn't sound like they restrict amount of nights or anything.
In the city of Winchester, they're not going to allow you to do one unless you do more than 30-day rentals.
Right. Okay.
So number of nights wouldn't be a problem.
Okay, well that sounds pretty good. It's not too bad then.
Yeah.
I'd say it's probably a 4. You know, it doesn't seem like totally unrestricted, but a
Yeah.
4 out of 5 would be about right.
Yeah, we'll take it.
All right. Hey, Vic, so that was a lot of information, really good information. If you guys want to learn more about what Vic does as a property manager in Winchester, or if you're an investor and you want him to help you find your next investment, we're going to drop his contact information in the video description below. But just to give you a quick summary, we had a score of a 5 for drivability, score of a 4 for demand, a 5 for dinero for that 20%, and then about 4 for friendly factor and 4 for things to do. So that would be a score of a 22. So we'll see if that score changes when we do some post editing here and you know, do a little bit more research. So that's not bad. It stacks up pretty good.
Great. Super.
For a little town like Winchester, right? It's like, wow, this got a lot of investment potential. So
yeah, Winchester's amazing. If you guys get an opportunity, there's a lot out there. There's history, you know, there's a lot of development, a lot of new industries coming there. Not to sell Winchester, but I live there, I invest there.
Sell it, man, sell it.
Yeah, I live there, I invest there, my family's there, my parents, my brother. It's a great town. I'm happy to, you know, in the future, hopefully raise our children there and just grow there.
Yeah, what I love the most about doing these interviews is like I'm able to discover markets that are not like the Smoky Mountains or Pensacola Beach. It's like, who's heard of Winchester?
Right.
And if it's getting a score of a 22, which is probably better than some of these other more well-known areas, that's pretty amazing. I think maybe the only downside would be, okay, you invest in maybe like Smoky Mountains, right, where everyone's there. Because everyone's there, it's driving the prices up. So your returns may not be as good as far as kind of like what we talked about, but your appreciation, it might be made up with the appreciation. But
right.
Winchester's been appreciating too. You know, it's still kind of Northern Virginia. You know, it's getting dragged up with Northern Virginia, right? So it's got kind of the best of both worlds. I like that.
Yeah, and I think Winchester is growth oriented. Like it's business friendly. Its taxes are favorable. Real estate taxes are low, and they want development. You know, and they're investing heavily in infrastructure. So we're seeing new roads. We're seeing better access roads to highways and expressways. And Winchester has an expressway. You know,
Wow.
To get from one end of town to the next. You know, it's just
Did it have an inner loop? That's next.
Not yet. Yeah. So.
Well,
yeah,
cool.
It's a great town.
So your website, I'll put the website below and in the description. And will they be able to find like your short-term rentals on your website?
So we've been so lucky and so just kind of working well with AirBNB. I don't advertise in the short-term, in the long-term rentals. I just organically do it through AirBNB. But if someone wanted for me to send them a link, if they have,
we'll put your link in the description. How's that?
Okay, for all three
each homes.
Yeah,
we'll do that.
Yeah, all my AirBNB links in there. Sure.
Okay, cool. Hey man, this is great.
Yeah, I appreciate
Enjoyed
your
it.
time. Thank you.
And if you guys like this video, don't forget to subscribe to the channel and like this video so we know that you like this type of content. And have you any questions, drop in the comments. This is your favorite homeboy, signing out.